Hello, 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 and a massive hello to everybody. Hope everybody's having a great day. This is 50 Pips, rocking and rolling, 11th of December, 2016. No trade calls, no recommendations. Everybody's responsible for their own stuff. We're here for educational purposes only. Again, as usual, thank you for spending some time with me on a Sunday, and thank you for all the likes, the shares, the retweets, and all the support. So, what's happening as we go into the FOMC week? So, there are some things on the data calendar in terms of we'll have to see how the market reacts with the OPEC news over the weekend. We'll have to see what happens with the China data. We do have, a lot of data out of the UK. We also have a rate decision out of the UK, et cetera, et cetera. But really, it's all and only about FOMC. So the big question is, are we going to get a little bit of a healthy correction on these moves? Or are we still going to power ahead in terms of everything's beautiful as welcoming Trump's presidency? So a couple of considerations. As always, the markets can remain irrational longer than you can stay solvent. The tricky thing here is really, if you're looking at it in terms of technicals, right, or in terms of the market, the equities are bid, right? So also, if you think about, everybody's very excited buying equities, everybody's saying, get long, get long, get long. A lot of people probably don't want to sell. They might think they get a better, cheap tax cuts next year, so deferred tax selling. Why sell at the end of this year? Wait till next year. What could the FOMC do to shock anybody? Probably going to raise rates 100%. Factored in that they're going to raise rates. So if you're long, really, there's no reason to get flat, right? Again, we tend to believe that correction would be healthy, but at the moment, there's nothing on the radar that would give bulls an idea, an inclination to get short or to flatten up, right? So we still think that it's always a little bit dangerous when sentiment is so skewed in one direction. But again, keep in mind that it doesn't mean it has to turn. And the fact that, if you're long, you probably want to hold long. If you're short, you're probably thinking, well, there's no real reason. We need some kind of catalyst. It probably has to be the FOMC. So I better wait till the FOMC. So you could get sideways to upside grind all the way into the FOMC. And I don't think it would shock anybody. Now, whether it's on low volume or high volume, if it prints, the price is real, right? So having said that, going into the chart, we're going to keep this easy. ES, bid, still rotating higher. There are a lot of confluence targets in those 2280s, 2290s, protection of that 23. But here, really, right, as long as we hold this grind, there's very little to stop it. Now, if you start to see some profit taking into the FOMC, what are the levels to look at? Well, the first level would probably be around this 22, 2190, which is where we got the start of that impulsive move higher. That's going to be the first bull bear line. But the more important bull bear line, as far as we're concerned, is the 2130s, right? So look at the 2191 as a intermediate bull bear line, right? And any dip that's very shallow and that holds there, then expect this to be grind higher until the end of the year. Again, unless there's some kind of catalyst, chances are sideways to up, right? If we break below that 2191, then we've got a chance to get a little bit more of a correction. Then the focus is going to be on those 2133s. And at that point, that's where it gets interesting, right? If that doesn't hold, then we could see a bigger correction, right? You've got a lot of levels to the downside. You could see you've got this trend line here with targets around here. If you're looking at it in terms of a bigger picture, so flipping on to a monthly. That's not what I wanted to do. There you go, right? You see you've got a lot of things pointing to those two levels we discussed, right? Which is still that 2191 and 2130. So those are the levels we would be focused on. Again, it's all about FOMC. We'll have to be very, very patient. And that's pretty much the same across the board if you're looking at Russell, whatever. NASDAQ's those highs. NASDAQ, we think it's one of the most interesting charts out there. We're going to be focusing on that a lot more this week in the weekly webinars. So that'll be an interesting point to focus on. ZB is not to sound like a broken record here, but it looks like it's trying to base a little bit, not doing a great job at doing so, right? So if it can find some kind of basing action here, then we expect the path of least resistance is to see some kind of a decent correction, right? If not, this is going to be heavy. So are we going to base or not? I suspect most people that have been watching this movie for a long time, and again, it doesn't mean it's going to play out or not. Most people are going to think, okay, well, this is going to stay heavy all the way into FOMC, just pre-FOMC or on the release, we'll get some kind of other flush, and then we get a little bit of a bounce because, you know, unless they do something that's not priced in, chances are it's time to get some kind of a correction. Now, in terms of the longer term picture, it doesn't change. We've been talking about this since last year. You know, our ultimate target here is pretty much into the 40s, 141s, 140, and that's still on the cards. We just think it would be much healthier to see some kind of correction to a bounce. You know, this could really bounce very, very hard and still hold a move down. Most likely watch on any bounce. I suspect a lot of the shorts will be more than happy to try and pile back in the 155s. But again, it's a tricky one. It's all about FOMC. We're going to have to be very, very patient here. And a similar thing on gold, right? What's happening on gold? You know, is it going to base? Is it not going to base? You know, the big question is, does it have some unfinished business? Does it have to clear those 1150s or not? Here, it's trying, right? A lot of, you know, very, very, very heavy here, but it's not getting any traction. So do we need one last flush back below this 1150 and it'll be the close back above that's going to give way to a decent correction? Or are we going to correct from here? That's the big question. For us, the bull bear line for the week is 1150s. Close below, extremely heavy. Look out below. As long as we close above, we think the healthy move would be 112, possibly all the way back into, 1200, possibly all the way back in 1240, 1250, and that would still potentially be bearish, right? But again, we're looking for healthy moves to try and play out. What's going on CL, what's going on crude. Well, we talked about, you know, we talked about last week, it was all about this bull bear line, about this yearly highs, and that failures to hold above would give us some nice tactical scalping opportunities to the downside, and we got that, right? So we can't complain here. We'll have to see how we open. These highs are bull bear line, you know, hold above, then we'd be looking for those 55, 60s to come into play. Expect to see a lot of selling into that 60 if we get there, and as long as we hold below, we think the path of least resistance is for a correction lower, and the number we've been looking at in terms of the weeklies on the charts is pretty much 47, 48. That's the level we're looking at to the downside, so that hasn't changed particularly. And last but not least, what's going on the dollar or on euro? You know, pretty much the same chart. We've been talking about this, and you know, are we going to get a healthy correction or not? We're holding above these highs. You see it really looks like it's coiling. Does that mean we have some unresolved business to the upside? This breakup zone is going to be the bull bear line going into the week. Hold above. If any move down is shallow, then you'd expect it to rotate higher off there. If we can close there, then we could see a bit of a healthier correction. And again, this could be just a healthy correction back into the 99s, 98s, and then to set up the next retest higher, right? All we're looking at is for some kind of healthy moves, healthy action, you know, and that translates pretty much to 105.50 to 105.00 on euro, you know, big support zone, bull bear area, extremely heavy on daily closes below, extremely heavy on a close below after FOMC. As long as it holds above, we'd expect to see some kind of a corrective move. So again, thank you so much for flying with 50. I don't want to make these too long. So again, we go all through all the charts in detail during the week. So let me know what you think of this. I think this could be a nice little format to just cover the five main markets for 5 main charts. So ES, CBs, GC, CL, and DX. Let me know what you think. Thank you so much for all the support, and wishing everybody an awesome week. I'll try and do as many updates as I can. Have an awesome one. Bye-bye. Take care, guys.